Good day, traders. This is your market bias update coming at you Sunday, April 23rd for the trading week of Monday, the 24th. I'm going to keep today's video real short. We have some economic data coming out that is likely going to cause the market to stay in a little bit of a tight trading range until we get a little bit of clarity from it. First off, the consumer confidence report coming out 7 a.m. on Tuesday. That one's going to be a big one, so keep an eye on that. And then second, on Thursday, the other big one that I'm looking at is the unemployment claims. Both of those are going to be really important. A few of these other ones are also potential market movers, but those two, the 7 a.m. Tuesday and 5:30 a.m. unemployment on Thursday, are the two major ones that I am personally looking at. Blasting through the major indexes really quick here. So for the futures market, it has just opened up on Sunday. Showing continued consolidation here. We are still above the 20 SMA moving average. It hasn't done anything wrong. The pullback is fine. Hasn't broken any trend technically. We still have a higher low here potentially in play. RSI is still quite high. This is showing that there may still be some consolidation coming our way. It might be hard for the market to break out with this RSI continue to be high. And I am noticing that the MACD has rolled over now as of the last couple of days of the trading week last week. So of note here, if we put that out on weekly chart just to look, since weekly chart is where we see our major trends, you'll see we still have this kind of rising wedge pattern here below 4,200 and then setting these higher pivot lows on the weekly. We do have a lot of support down here underneath us, so I'm not necessarily concerned about a larger sell-off per se, but I don't necessarily see any specific trends developing, at least on the index levels. This week might be either a wait and see week or looking for individual stocks that have strength in the face of market weakness and continued consolidation. Pushing out to the NASDAQ. Looking at the NASDAQ, kind of the same story. Actually seeing a little bit more weakness in the chart. You'll notice that price is actually broken down below the 20 SMA here in blue, and the 9 EMA, our shorter moving average, is actually now crossing below that longer term 20 SMA. So we don't necessarily like to see that happening. That cross tells me that we might see some more consolidation as long as it stays above let's say 12,900. I don't really see much cause for concern. Also noting that the MACD has not only crossover and weakened here, but we do actually have a lower high here that has formed. So that is showing potential divergence on the MACD. Also telling me that we might have a little bit more consolidation or maybe even a slightly deeper pullback here. I think that story is really just going to hinge on earnings. We have a ton of companies reporting earnings this week, a lot of them in that major tech space, Meta, Facebook, whatever they rebranded as Meta. Amazon, Google, Microsoft, I think are all on tap for this week. So the story of the NASDAQ and probably the larger market, whether it wants to try to break out or more consolidation or a pullback, is probably going to hinge more on that than anything else. And then those two pieces of economic data that I mentioned for Tuesday and Thursday mornings. Moving out to the Russell. Russell is still the weakest area of the market right now. These small caps. On the weekly chart, you can see it has just a ton of overhead resistance here due to all these moving averages kind of clustering between 1,800 and 1,850. So really nothing to see here unless we see a break back above about that 1,840, 1,850 level on the weekly chart. If we put this out to a daily chart, same kind of thing. This is uninspiring. We have a decreasing 50-period moving average that is just crossed below the 200-period moving average here in gray again. That is not a great sign. And the MACD, even though we did cross slightly positive here over the last week or two of trading, it looks like it's rolling over and looking to go bearish again. So not a whole lot of confidence here either. Finally pushing out to the Dow Jones Industrial Average. It's holding up better than the other indexes. Actually, it's above most of its moving averages, kind of tightly hugging right at the 9 EMA. So we'll see which direction it wants to go. Again, probably going to be focusing mostly on earnings over the next week here to see what happens with that. Putting it out to the weekly chart, I mean, we still have this diagonal resistance zone intact. To me, it seems like we're at the higher end of the chart here, and we may see more consolidation. I wouldn't be terribly shocked over the next few weeks to month to see this pull back and retest this 50-period moving average again, somewhere down around 32,700, 32,800, somewhere right in there. Moving on to Bitcoin real quick. It's still showing strength, actually still looks pretty decent on the weekly chart, still holding its 9 EMA here at around 26,600. So I like that. I do note that there was some pretty significant increase in volatility that came in here, that big red candle last week. And if we put this on a daily chart, you'll see it broke shorter term moving averages. The 9 EMAs crossing below the 20. Again, that's not a great sign. We do have a decent amount of support coming into 26,000 and again that 26,600 level. So somewhere right in there above the 50-period moving average. I don't see a trade to the upside here on the short term until this chart develops a little bit. We need to see some kind of a signal candle here, and then hopefully some kind of confirmation candle signaling that this retracement is done. And I want to see this MACD clear up because, again, we do have a slightly lower pivot high twice now on the MACD, signaling a little bit of divergence from the higher pivot highs we were seeing in the chart here over that same time frame. And I'll just highlight that. So basically from here on, we were setting higher highs, but from that same time period here on the MACD, we've had a slight decline. So we need to see that clear up a little bit. This is trying to break down below the zero line, so don't particularly like that. Probably need to see a few days here for this to clean up. Obviously, Bitcoin is one of those assets that can clean up very, very quickly. You see this giant, gap on Sunday a few weeks back and then just run, and it just didn't stop after that. So it can clean itself up very quickly, but right now there's a lot of volatility at the top end of the chart that we need to be aware of. And a lot of traders are actually starting to say that the VIX, the volatility index of the market, is broken. So usually a healthy market kind of ranges between 20 and 30, with 20 being the lower end where there is less volatility in the market, and 30 marking the point where there is high volatility in the market. Right now, on a historical perspective, we put this back on, let's say, a 3-year chart. We're not at the lows, but we are pretty close to the lows down here, signaling that there is not much volatility in the market. And we are, like I said, going into a pretty heavy couple of week stretch of earnings. We do have a lot of that economic data still in play. So I wouldn't be surprised to see volatility come back and kick back up here. For option traders, that means probably favoring buying options instead of selling options. When the VIX is low, you don't have a lot of premium in those, so selling options to capture the premium doesn't make a whole lot of sense. Instead, looking for debit trades because they are lower cost and might have a little bit better risk to reward. So looking at that, but jumping back to Bitcoin, some traders are actually starting to use Bitcoin as their proxy for market volatility because it is such a volatile asset class, and because it really shows kind of the underbelly sentiment of the market. If people are feeling exuberant in the market, we get these nice big rallies in Bitcoin where it's kind of a risk on, like, let's just go. And then in times where we see this volatility come back in, it's showing either a lot of profit taking from that previous run, or potentially more people are getting fearful and starting to scale back their positions that are a little bit more aggressive and looking to put their money towards things that are a little bit more conservative. So just an interesting note on that. If we jump out to crude light, nothing really to see here. We did have a chance to potentially break out of this decreasing 200-period moving average. Didn't get it. Instead, volatility came back in, just got slapped right back down. It is in kind of an intermediate support range here, but we don't really have good support here. We can go back and draw a diagonal uh, support line here, and that does kind of coincide to the 50-period moving average. So if we get a couple of days of consolidation here and we see the MACD start to curl a little bit again, I might favor some kind of a bullish trade going into energy stocks or oil stocks specifically. But right now, there's not a whole lot to see. This needs a few more days to kind of clean itself up and see where it wants to go. Let's go out to gold next. We have a little bit of a rounding top here on gold, and this is going to be tied partially to the US dollar. Last week, the dollar tried to bounce and actually broke through both of its shorter term moving averages and looked like it was really wanting to rock and roll and potentially start its a leg up again here, but it got knocked right back down. So there's nothing really to see. It's kind of caught in a range here between 2770 and 2786 until it breaks one side or the other. I honestly am not going to have a very strong opinion on the overall market as a whole. If the dollar breaks lower, that's actually good for assets. So that might support a bid to prices in the actual stock market. If it does end up reversing and breaking back to the upside here again and takes out that high at 2786, we might see a little bit more consolidation or even a little bit more continued pullback in some of the other areas of the market. And then one of the last ones here, I'll go through just a couple more, but I'm really enjoying this long, drawn out bottoming of natural gas. And it's interesting. It still has overhead resistance. Obviously, with its moving average here, the 50 that is above it. So it needs to clean up. But if we do end up breaking out of these previous highs, around $2.39, let's say, if we break out above that, that will kind of officially put in the bottom of this bottoming pattern. That's kind of where I'm considering bear stop out to be. And that's the place where anyone that was trying to short this is going to be forced to cover their position and take a loss. So if we take out the high of this previous pivot from last week, that will be good for the bulls. And it's gotten beat up so heavily over the last 6 months that it could play some catch up, and we could see a nice play in natural gas. There are a few different stocks in that natural gas area in case people want to play that and don't want to partake in the volatile area of the futures market here. I would suggest doing that on individual stocks instead. Last but not least, let's go out to silver. Silver hasn't really done anything wrong either. It's still consolidating above the high range from this long consolidation period we had at the end of 2022 and beginning of this year. It is showing a little more weakness here than I would like, and that's probably partially because it was pretty overextended. I mean, if we look at this, it ran 31.5% in just over 35 days. So that is a massive, massive move for silver. It needed some time to chill out, and this is really the first actual pullback that we have gotten. I'm not convinced that we're going to see a breakout here yet. I think it still needs to chop sideways for a little while at least. I'm going to be less interested if it actually breaks the 20. If it breaks the 20 here, it might be a quick journey down back into like the 23.5 area. So just going to be waiting and seeing basically on that and seeing how that shapes up. So anyways, promise to keep that nice and short. The last two things I will point to, the advanced decliners right now. On the daily chart, the 20-period moving average, which is kind of one of our indicators, is still kind of hovering in the positive. It does come to mind, though, here, I'm going to zoom in a little bit, that the 9-period moving average in green here has crossed below the zero line for the first time in basically a month. If we go back to 324, that was the last time that it crossed over the zero line and became bullish. And if we put that back out to the S&P, just to look here, 324, I need to move that so I can actually see, 324 was basically right here. So right here, it gave us a bullish signal. We had a nice big bullish run, and now it's actually starting to show a little bit of a breakdown and a little bit of weakness there. Not necessarily saying the end of the bull run right now, but just a little bit of cause for concern. So keeping an eye on that. And then last but not least, that I'll show here is the AR high and low 1 month chart. So this chart basically takes all of these stocks on the Archipelago Index, tracks over 8,000 stocks, and shows the difference between how many of those stocks are showing a new high over the past 1 month versus how many are showing a new low over the last month. And the difference of that can be very insightful to the market to tell us overall what is the market doing. And you can see here again, kind of since that same 324 area till now, we've had this nice bullish run where more stocks have been setting new highs over that 1 month time frame than new lows. So we had a nice positive reading here. We are right back kind of towards the lower end of that bullish mark. Anything below 50, we consider kind of neutral, and then below -50, we consider bearish. So we're kind of right back into that range where it could go either way. If we do want to see the market break out, we're going to have to see this reclaim some strength. So I will leave it there. Sorry for the phone call interruption there, guys. But let me know in the comments if you have any questions or if you want me to take a look at any individual stocks for you. And again, this is the weekend bias report going into the trading week of April 24th. Hope you guys are having a great day. Have a good trading this week, and obviously keep tight stops if you do trade this week, because we're kind of in a spot where I could really see the market going either way. I'm not seeing a lot of bearishness. I'm not seeing a lot of bullishness. There's a lot of charts out there that just need more time to develop. And I think between those two economic data points that are coming out and a slew of earnings coming out this week, that should knock the market one way or the other and give us some kind of a range that we can actually start playing in our trades again. So hope that helps, guys. Talk to you soon. Bye.